Hi, this is Jack from Alpha Charts with a state of the market video. Today is December 11th, 2021. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, let's start with the SPX as we always do. And it looks like a closing all-time high on the S&P, right? I mean, nothing is more bullish than a closing high, right? We also have a good bullish crossover of the moving averages, and 50-day is still trending up after the test down here. I mean, so really not a lot not to like on the S&P. Looks pretty good. It is cap weighted, so we're going to go into that a little bit also. So let's look at the equal weights to see what the picture looks like there. On the equal weight S&P, not as rosy, but not terrible, right? We have not quite back to all-time highs, but you are getting that bullish cross. 50-day is still rising. Where we, the bulls needed to hold, that's where it held down here. This could have just a flush and then boom, right back up. We'll see what happens. But if you look at these candles here, you had some sellers show up here, indecision, kind of indecision, spinning top. That's again, that is, or we call this a hammer, I guess. But either way, it's this is again just a lot of indecision in these candles, in my opinion. Bulls and bears duking it out. Again, this is on the equal weights. Let's look at the Qs. So on the Qs, you have not quite back to all-time highs, but again, you have rising moving averages, right? It held where it should have, or bulls needed to, I should say. So again, not a bearish look at all in Qs. Now in the equal weight Qs, again, it's a little bit different, or a lot of bit different. And this is actually the chart that I've been really putting a lot of weight into. I'm gonna go to the line chart. Just gets a little bit cleaner, and let's just get some of these. Moving averages are down, as you can tell. I'll leave the 50 on there. So on a closing basis, this trend line has been violated, and price dipped below it. It's coming back into it. What does that mean? I mean, obviously, there's a lot of weakness in the equal weight Qs. A lot of tech, a lot of the growth companies, which are in the Qs, got hit pretty hard. One possibility is a potential topping formation. Again, I'm not putting a ton of merit behind that, but it is something that's out there. And then the question is this the neckline right here, or is this the neckline down here? I think that a violation of if this rolls over, I think that $81 becomes paramount of importance, is the level to watch, right? Because then you would have a potential topping pattern, major resistance, turn major support. So if $81 breaks on the equal weight Qs, I think that is the most important chart that I'm watching right now. Yeah, so it's but then if it holds here and recovers and goes back up and gets above this 87.75-ish area, then that would be definitely a very bullish situation. Again, I put a question mark because we just don't know which way it's going to go, but I'm definitely watching equal weight Qs. IWM, held where it had to and bounced. I mean, it's just in a consolidation range after it tried to break out, false breakout here, but it held where it had to. Big volume coming in too, so we'll see what happens. Right now, it's just choppy, nasty mess for it. Literally almost a year. And IWO, it looks pretty much exactly the same, right? Choppy, nasty mess for almost a year. Financials broke out, came back, we'll call this a retest. And now it's trying to move higher. It is under the 50-day. We don't like that. So they're not leading, but they're just chopping around. We'll say that they're participating at this point still. I guess that's a positive. SMH. SMH looks pretty good, right? It's moving higher. Now it's going through a consolidation phase, letting moving averages catch up. I mean, so if semiconductors are moving higher, I think that that is a very positive sign overall for the market. You know, the wood ETF, lumber ETF, you know, again, it's in a range, but now it's at the top end of the range. And a couple of VWAPs that were important are now whole prices back above them. They're basically in the same general area. But prices right back above them both, you know, the one from the high, and this was from this big volume day right here, beginning of the year. That's what this was, beginning of the year, and from the high. And yeah, so it's just testing this upper area again, a breakout higher than, you know, 89.75-ish. And I think that it's a bodes well for the bulls, right? If this rolls back over, then we're just in a choppy range and there's no real signal. But again, a breakout here, that would make me very much more bullish. We're not seeing that quite yet. All right, so going to bond ratios, government bond versus high yield bonds. Let's take out all this nonsense and clean this up. And here we go. So the question is this area and this area similar? And do we get the spike up afterwards? So there's no evidence of that yet, right? So I am watching. It does look very similar in a lot of ways. So we're watching for that next spike up, but this 1.52 area has held. And again, that's one for the bulls. So I think we have to start leaning a little bit more bullish that it hasn't held. Now, again, if we start getting, if this is what's next, right? If we're in, you know, this area of the pattern, then we got to watch out for this area next, right? If we see this happen, I think that would be very, very bad. We'll see though. But again, there's no evidence of that yet. So again, we got to go with what we see on the charts. And so the leaning has got to be on the bullish side for bond ratios. VIX coming back in. 18.69. Again, we had a big spike there. It came back in though. Still, so it's very reasonable at this point. So that looks really, really good. Same thing for the VXN. Looks fine. So let's start doing some breadth stuff. Oh, put call ratio. Hold on. Put call ratio. Yeah. So I mean, the equity only a couple weeks ago, a couple days ago, actually, December 3rd, last week. It got a bearish tilt to it, but never got extreme. So we'll see if it gets extreme or not. It had, you know, kind of bounced back, came back down, choppy around. So no real signal here. You guys see in early November, it got very, very bullish, and that's when all this nonsense kind of started. So we'll see if it takes out this, you know, 0.98 or so, you know, 1.0 parity put call ratio, and gets into this area. That would be as a contrarian, you know, maybe a bullish sign. We're not quite there yet though. So again, no signal really on put call. All right, breadth studies, because I think these are interesting. Value line geometric index in a range looks a lot like IWM and IWO, a lot like it. False breakout, held where it had to, right? And now it's just chopping around. MFI, you know, when you look at it, you know, we're still weak breadth, had a little snapback. You know, is this just a little snapback rally and then it rolls back over for another leg down? Maybe. I mean, if we get into this green zone, this is an area that I would, you know, consider as a contrarian to start to buy some, or at least start nibbling on things, because it means that we're stretched all the way to the bear side, but we're not there yet, right? We'll snap back, not great breath, and we know that from the QQQE, right? Equal weight Qs. Gold. Let's go to weekly because it's such a big pattern. So I was real excited about gold here, and then it rolled back over, and it's done not much since. So I'm still watching this one, right? I can probably move this. It's only 2 touches, so it's not a great, trend line, but it is what it is. Yeah, we'll call it 3. 1, 2, 3. So again, if it breaks this trend line, I'll probably give gold another try. As of right now, though, and as a indicator, it's not showing a rush to safety. If gold is a rush to safety, so that is, I guess that's a positive for the market too, right? We're not seeing this big spike up in gold. That's good. Let's just easy way to get there. Bitcoin. All right. So on Bitcoin here, go to daily. Let's go to bars. And I like to have all of this on there. All right. Bitcoin as an indicator really has gotten hit hard. So the correlation with the market is actually pretty good. It is down top to bottom, roughly 30%, and everything is moving lower. So right now, Bitcoin is guilty until proven innocent. This 40,000 area, that's the part that's probably got a hold pretty good. But as an indicator, until we see this being a risk on asset start to make a bottom and turn around, I think that's a negative for the market. Again, Bitcoin being the riskiest of the risk on assets out there, in my opinion. So that's what I'm looking for with Bitcoin. Again, we're not seeing it slowing down yet. So there's that. All right. So what does this all mean? Basically, in my opinion, the market is being supported by stocks like Apple, right? Straight up. This is not sustainable, by the way. That's going to have to come in with breath so low. When this does come in, what does that mean actually, right? So if Apple's supporting the market and there's not much underneath it, and then Apple starts to correct, Microsoft looks pretty good comparatively. Again, I'm going over some mega caps that I believe are holding up the market. As of right now, it looks fine and not quite as extended as Apple. Google, same thing, looks fine, not quite as extended as Apple. Let's try to answer valid. That being said, if these big mega caps start getting hit, what do you think is going to happen to equal weight Qs? Not equal weight Qs, to regular Qs. It's not going to look like this for long. So we have to watch those mega cap names. Nvidia, when you look at Nvidia, it's already starting to roll over. And that's not great for the market overall. And there is, one theory or thought that if the mega cap, if the institutions need to get out of the market, they sell small, medium, and mid caps, and the less liquid names go into the large liquid names, and for 2 reasons. 1, they can hide there, but 2, if they do need to sell, it's easier for them to get out of those names than it would be a smaller name. So that's, again, just a thought. Overall, it's a mixed bag. Breath still stinks. I think the market's still being held up by the mega caps. There is improving signs, and there's still a lot of question marks, right? Like, we trade what's on our charts, but is this the start of this? I don't know the answer to that. Is breath going to recover, or is this right, or is this right? Again, we don't know. The market is chopping. It's just not a great environment right now. Very, very hard to trade. I'm personally 100% cash because there's just not enough information for me to feel good about this market yet. And I may next week, right? Things could change. I could see, what I need to see in the bond ratios, or even like in my scans, right? Things have to start showing up in the scans, and themes have to start showing up, and we're just not seeing that. We're seeing a smattering all over the place of names, and just not institutional support right now from what I see, right? When I look at, like my favorite scan here, again, there's information technology, entertainment. By the way, I like these two names a lot. There's retail in here, real estate. There's another software name, China Auto, another Chinese name. Again, there's no theme in here. There's no oomph behind these names, right? So it's been like that now for a couple weeks. So that's something that I need to I take into account also. Is the scan resulting names, or is it not? And right now it's just not. All right. So I think caution is still warranted, but I think optimistic caution is the way I look at it. And again, things could change next week. We're coming into year end though. If there's a Santa rally, Santa better hurry up. We'll see what happens. There could be one more push higher, or multiple pushes higher. What do I know? But we're coming to the end of the year, and this is where some people talk about tax loss harvesting. That's already started. Maybe traders start taking time off. That again makes the markets a little more wonky. So we'll see what happens. Again, my opinion: caution is warranted. Protect your mental capital as well as your physical capital, and take care. Bye, guys.